Ladies and gentlemen, good day and welcome to Wheels India Q2FY25 post-result conference call hosted by ICICI Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vishakha Maliwal. Please go ahead.
Thank you, Nikita. Good afternoon, everyone. Thanks to the management of Wheels India Limited for giving us the opportunity to host the call. We have with us the senior management, represented by Mr. Srivat Ram, Managing Director, and Mr. P. Ramesh, CFO of Wheels India Limited. I'd like to hand over the call to the management for the initial remarks, followed by Q&A. Over to you, sir. Thank you.
Thank you, Vishakha. Good afternoon, everyone. Welcome to our Q2 call. Wheels India has registered a net profit of rupees 21.92 crores as compared to 5.24 crores in the corresponding quarter of last year. Of course, last year we had one-off expenses for pre-delivery inspection charges, which was almost close to 10 crores. So that's why last year was low. This year we registered revenues of 1,085 crores for Q2 as compared to 1,189 crores in Q2 of last year. There are a few reasons which I will also cover later on. For the first half, if you look at it, the company registered a rise in net profit at 47.29 crores as compared to 18.46 crores in the corresponding first half of last year. Again, revenues were 2174 crores for the first half this year compared to 2322 crores. Now, generally, if you look at it, I'll come to revenue next. But first, if you look at profitability, very favorable product mix, notably increase in machining of windmill castings, where we ramped up actually in this year. Productivity improvement and cost control across units resulted in a good growth in profit that we had for the second quarter in succession. And these measures that we have in place are likely to continue to maintain some kind of profit trajectory in the current year. On the revenue side, if you actually look at it, Q2 saw a drop in both CV and tractor requirements. As all of you must be aware, as it's also in the media, both these sectors had a drop. And for Wheels India specifically, there is a significant drop in the lift air suspension system business for trucks, as there's a move away from multi-axle and towards trailers. On the export front, as I've indicated in earlier calls also, things are slowing down globally, both in US and Europe, resulting in not only cut-in schedules on existing business, but also delay in introduction of new products as customers have to exhaust their stocks. So while this year we are probably going to see a reduction in exports, we expect that the new products which have so far not come in, which will definitely come in next year, will ensure some growth in export in the coming year. On the capex front, while obviously existing business capex when utilizations are low have not really happened, we are investing about 225 crores, notably towards the expansion of machining of windmill castings, agriculture wheels, hydraulic cylinders, and little bit in cast aluminum wheels. In terms of growth prospects, in the second half, we expect that CV, tractor, and to some extent aluminum wheels will pick up in Q4. With that, I've finished my commentary on the Q2 H1 results, and now I'm open to any questions or queries that any of you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a minute while the question queue assembles. The first question is from the line of Amit from SMIFS Limited. Please go ahead.
Hi, sir. Congratulations for the good operational performance in Q2. Sir, can you please help us in understanding the export market situation at present, including the freight rates and the inventory situation or challenges over there? Also, if you can spend a few minutes and guide us on the outlook for the domestic market segment-wise, that would be really helpful, sir. Thanks.
Okay. I can try my best. I think on the export front, actually Europe has been slowing down quite a bit over the years, and even recently I was in an expo in Europe, and people are saying that even our distributors are saying that they've gained market share, but the volume has dropped. So it's a question of actually those markets have gone through a little bit of a trough, and we have to wait for those markets to improve. When the overall market improves, given our gain in market share, we should be able to improve. This is one example, but if you look at the US also, US is also showing signs of slowing down. It varies from segment to segment. I am made to understand, for example, that mining should improve in the coming year. Construction should also see some improvement, although I don't know what the US results will have in terms of these various activities. But I'm just giving you the customer feedback. For us, exports are largely agriculture, tractor, construction equipment, and commercial vehicles, and also aluminum wheels. Agriculture tractor globally is going through a little bit of a recession. Not so much India, but the rest of the world volumes are down about 30%. So it's a cyclical business, and at some point the cycle turns, and then the volumes grow by an equal number. If you look at the domestic market, CV in Q1 was actually quite good. Q2 has been quite negative. And while Q3 is not likely to be worse than Q2, we think we'll have to wait till Q4 to actually see an improvement in the CV market. Tractor, on the other hand, has been fairly muted, but we expect that due to the fairly decent monsoons, Q4, which is again because of the season, this whole harvest season which happens from mid-January, we expect that the Q4 will be strong on tractor. On the passenger vehicle side, I would rather wait till post-Diwali and see how the sales actually have happened before I comment. But customers seem to be still confident of meeting annual numbers that they predicted. I hope this has answered your question.
Yes, sir. This is very helpful, sir. Sir, secondly, so exports is about 1/4 of our business, which is expected to decline in this fiscal. And in the domestic, demand doesn't look very healthy for the commercial vehicle, and that's another 25% of the business. So considering all these things in the picture, how much revenue possibly can achieve in FY25, and any aim for FY26, please?
See, FY25, the way I look at it, I think the revenues will be slightly less than FY24. Pretty much, whatever you've seen in the first half is what you can expect in the second half. Maybe Q4 may be slightly better, but pretty much what you've seen in terms of the company's results in the first half are likely to pan out for the balance part of the year, with some improvement possibilities in Q4.
Okay. And sir, you have mentioned in your comments that new products introduction in the exports market. Can you please explain what exactly is this?
So there are a couple of areas where we're looking at. One is hydraulic cylinders, where we are seeing a lot of potential. Some of the business that we are looking at may take between 1 to 1.5 years to kind of fructify. But at least within 1 year, we'll get in some kind of committed state with the customer. But it may require expansion, in which case it takes 1.5 years. The other area which we are looking at is actually widening the range of products that we have on agriculture tractors, because when we're going to export markets, people are saying unless you have the entire range, we can't look at you as a replacement supplier. We can't look at you as a supplier who can take over existing people. So we're widening the range of products. That is the second area that we're looking at. The third area is that there are some products on construction where the development or testing cycles are physical and very long. So as a result of which, while we've developed the product, for it to go through all the testing and come out will probably result that not in this year, but in 25, 26, or even 26, 27 is when the volumes will come. So some of these products that we've developed are quite profitable.
Understood. And sir, lastly on the alloy side, so presently alloys is on the LPDC technology.
Yes.
Sir, how much is the current capacity, and are we planning to increase the same?
See, it's थोड़ा सा ही, because अगर आप आज तो पूछें तो I'll say probably about 40,000 is current, for 40,000, which is let's say 500,000 per year is the annual capacity. We'll be increasing it by about 10,000 a month by end of the year. It's more debottlenecking as opposed to expansion in aluminum.
And sir, also continuing with this, if you can help us on the current utilization level of this alloys and any orders in hand and which clients we are serving, please.
Sure. Yeah, as you probably know, we don't name clients, but I can give you some hint. When we started supplying, we had one MNC based in Chennai who was very low volume. We have now started supplying to one of the top 3 manufacturers, not based in Chennai, but one of the top 3 car manufacturers. And that customer has said that he will increase our volumes on a month-on-month basis and hopefully take us close to 20,000 for that single customer itself. This is in addition to 20,000 a month for that single customer. This is in addition to our export business as well.
So how much alloys goes into domestic and how much is in exports?
Domestic में अभी तो काफी कम है, but to give you an idea, let's say instead of saying what it is today, let's say if I go forward to probably say April or something of next year, there will be about 25,000 in domestic and maybe about 15 in export.
Okay. And so lastly, on the margin side, we are very happy to see the margin turnaround in the industrial business segment. So can you please elaborate the same and the sustainability, please? Sure.
So one thing is, yes, of course, it looks fairly spectacular to go from a marginal loss to a profit. But last year, we had a one-off charge of almost about, I think, 9.84 crores or 10 crores. Which is pre-delivery charge. So purely based on the fact that this year we don't have it, you should have had a 10 crore swing. But added to that, this machining of windmill castings is quite profitable. And we have actually ramped that up quite substantially compared to the same period last year. Now, a little bit about this business. We are kind of tied with a large casting manufacturer, a multinational company, and they are currently operating at, say, 25,000 tons a year. Now, they have a plan to expand this to 45,000 tons in the next couple of years. And as they expand that, we also expect that our volume and our business there will also increase.
So this 7.5%, can we assume it's sustainable? And the EBIT margin?
Yes.
Okay. And so lastly, sir, there was some margin fall observed in the auto segment on a quarter-on-quarter basis, despite having the flattish revenue.
CV गिर गया है, इसमें तो CV का volume तो गिर गया है, वही है.
Understood. Okay, sir. All the best. Thank you so much.
Okay, thank you.
Thank you. Participant who wish to ask a question may press star and 1. The next question is from the line of Rajakumar Vaidyanathan, an individual investor. Please go ahead.
Yeah. Good afternoon, sir. Thanks for the opportunity. Sir, just a couple of questions and then a couple of housekeeping questions as well.
No problem.
The first one is on the previous call you mentioned that you're working on some export programs that will translate into revenue in Q4. So I was just going through your press release. So you are saying that there will be a drop in exports. So I just wonder whether that is also getting right shifted and we will not see the revenue in Q4.
Yeah, no, that's absolutely right, because what's happened is because their overall schedules have reduced, their time to deplete inventory and commitments they made to existing suppliers has extended. So as a result of that, our program starting has gotten pushed by actually 1 or 2 quarters.
Okay, so we will not see that revenue in this financial year. That will get right shifted.
Right now, it looks like April, May, June is when it will happen.
Yeah. Okay. Yeah, thanks for the clarification. Sir, so if I see your this quarter number and the previous quarter number, it looks like your margins have kind of stabilized, whereas the revenue is kind of dropping because of the slowdown in demand. Is that a correct assessment?
No, that's a fair assessment.
So we can expect that the margins to be kind of maintained in the subsequent quarters, whereas the demand could be soft or it could recover as things progress.
I believe so.
Okay.
Of course, one thing that I need to say is there's any sudden increase in steel price, it could hamper the immediate quarter.
Okay, got it, sir. Sir, I'm also
export correction, price corrections are prospective and not retrospective.
Yeah. Thanks for clarifying that, sir. Sir, I'm also going through your press release. So you're saying that I'm just reading the last portion of the release where you're saying the measures will continue into the second half, and we are hopeful of maintaining the profit growth in this trajectory in the current year. So can you
profit percentage is probably more accurate. Probably, as you said, that EBITDA margin maintaining that is probably more because growth depends on which reference period you're taking.
Yeah. That's the reason I wanted to highlight that. So you're saying the EBITDA margins will be maintained.
Q4, I think it will be very difficult to show any significant or any growth compared to last year Q4, as it was kind of a bumper period.
So usually you show a good Q3 and Q4 generally appears to be good for you because you get some discount and all that that you mentioned in the previous call. So is it safe to assume that those things will come even in this financial year?
No, I'm a bit cautious on that because last year Q4 we actually had a price reduction, whereas this year Q4 if there's a price increase, that price increase may take away that volume whatever you call that discount, purchasing discount.
Okay, so there will not be any lumpiness. So basically, the current margins will be kind of maintained.
Yeah, I'm a bit cautious on this because we don't know what will happen in Q4, but the indications now seem to be suggesting that. So that's why I'm factoring it in.
For clarifying that. I think I don't want to for the near term wanted to just say the margins are going to be maintained. That's the reason for the question. And may I pushed it too much on the near-term numbers.
I'm sorry, can you repeat that? It broke off in between, so I couldn't follow you exactly.
No, I was saying that if I pushed you too much on giving near-term perspective for that, I just wanted to. Yeah.
No problem. No problem at all.
Yeah. Sir, just continuing. The next question is, I see that your inventory has come significantly compared to the previous similar quarter, almost 16-17% drop. So this is again a function of the slowdown in demand. Is it due to the fall 16%, or is it a combination of both?
No, I think probably some credit should go to the team managing the inventory who've taken it as a target and have found ways of reducing it.
Okay. And so just two housekeeping questions. The first is, in the cash flow, I see there is a non-cash expense of negative 5.2 crores shown in the cash. It's an income. So I just want to know.
Sorry for interrupting you, sir, but your voice is not clear. Could you please use handset?
Yeah. Can you hear me?
Yeah.
Sorry about that. This question is on the cash flow. If there is an item of 5.2 crores and negative cash flow, so it means it's an expense, but it's a non-cash expense. It could give some color coming from the current quarter, or is it coming from the previous quarter? Because that is.
I'm not entirely sure I heard you properly. Ramesh, would you like to take this question? Mr. Ramesh? You need to unmute.
Yes, sir. Can you repeat the question, please? Your voice was breaking. So, Mr. Ramesh, in cash flow, you see there is an item called
Sorry for interrupting you, sir. Rajkumar, sir, your voice is not clear. It's breaking.
Yeah, I'll just
Still, it is not audible.
I'll back.
The line for Rajkumar seems to be disconnected. So we will move next question. The next question is from the line of Vikas Bansali, an individual investor. Please go ahead.
Good afternoon, sir. I'm Vikas Bansali from Ahmedabad, retail. I invested. Yeah, thank you. Sir, I invested before 3.5 years ago at our shares at a price of. Sir, our company is doing, sir, very well. The growth is very well, but the investor don't get any return from the last 3 to 4 years. So, what's your?
So, मैं तो प्रॉफिट इम्प्रूव करने के बारे में देख रहा हूँ. ये स्टॉक मार्केट के प्राइस की वजह से जो होता है, that's not in my control, unfortunately. But I would imagine that, if we continue to show this improvement, stock market में भी कुछ फर्क होने चाहिए ना.
But sir, as an investor, really I have like बाकी सारे स्टॉक्स में काफी अच्छा रिटर्न हुआ है, मार्केट अच्छा चला है, अपना कंपनी का ग्रोथ अच्छा है, उसके बाद भी एक इन्वेस्टर को अच्छा रिटर्न नहीं मिल पा रहा है. तो क्या प्रॉब्लम है या कुछ पेन है, लाइक एनी कंपनी तो काफी अच्छा कर रही है, फिर भी ऐसा क्यों है? तो वो एक इन्वेस्टर के लिए एक क्वेश्चन है. तो उसका सर कुछ क्या आप देंगे, लाइक इन फ्यूचर कंपनी का कुछ अच्छा ग्रोथ तो हो ही रहा है वैसे, बट तो कुछ रिटर्न प्रोस्पेक्ट कुछ मिल नहीं रहा है. माय क्वेश्चन इज दैट, सर.
You're talking more about the stock price, no? That's what you're asking.
या सर, मतलब लाइक अच्छा ग्रोथ होने के बाद एक अच्छा रिटर्न तो इन्वेस्टर लाइक रखता है एक अच्छे कंपनी में, और काफी अच्छा कंपनी है अपना सर, और इसीलिए मैं काफी टाइम से होल्ड कर रहा हूँ इसको. बट सर कुछ रिटर्न एज ए इन्वेस्टर नहीं मिल पाया है. एज आप पूरा स्टॉक मार्केट भी अच्छा ग्रोथ किया है, अपना कंपनी ने अच्छा ग्रोथ किया है, उसके बावजूद.
नहीं, आई अंडरस्टैंड आपका सवाल. तो I understand. I also agree with you. That if beyond a point financial performance improves, then market भी उसको price करने that should happen. Pricing should happen. I think we'll just
अदर peer group और स्टॉक सारे काफी अच्छे रिटर्न दिया है, लाइक अपना जैसे एंड के बेस काफी अच्छा रिटर्न परफॉर्म किया है, ग्रोथ किया है, परफॉर्म भी किया है और इन्वेस्टर को भी रिटर्न मिला है सर. बट अपनी कंपनी में सर मैं रियल और काफी अच्छे इन्वेस्टमेंट मैंने रिटर्न किया है, काफी लॉन्ग इन्वेस्टमेंट पर से ही किया है. बट एज ए इन्वेस्टर एक थोड़ा पेन है सर कि रिटर्न नहीं मिल पाया है. सो अब मेरी आशा क्या रख सकता हूँ आगे?
हमारा परफॉर्मेंस तो अभी इम्प्रूव हुआ. सो द ओनली थिंग आई कैन से इज दैट अगर आप थोड़ा पेशेंट है तो जरूर कुछ तो होगा. बट आई कांट मेक एनी कमिटमेंट्स ऑन व्हाट विल हैपन टू द प्राइस. हम उतने ये इन्वेस्टर कॉल की वजह से हम और कुछ नहीं करते हैं.
नहीं, राइट सर, राइट. थैंक यू सर, थैंक यू वेरी मच.
थैंक यू.
Thank you. The next question is from the line of Raja Kumar Vaidyanathan, an individual investor. Please go ahead.
Sir, thanks for the follow-up. Sir, I was just asking this question on cash flow statement. There is an item of 5.2 crores shown in negative as non-cash expense. So if you could give some color on that.
Mr. Ramesh, can you take this?
Sir. Yes, sir. These are the movements in the provision, because every quarter when we do the book closure, we either increase or decrease the provision based on the assessment of what needs to be provided for. So the movement in the provision is what is which is a non-cash item basically, which is what is reflected in this case.
Okay. So this provision is against what item, sir?
It could be against inventory.
Okay.
Inventories and receivables.
Yeah.
See, we have certain norms in our company. Receivables above a certain number of aging or inventory above a certain aging, we tend to provide for.
Okay. Got it, sir. So the second housekeeping question is if I see the profit numbers standalone vis-a-vis the consolidated, basically I just see that the subsidiary number has moved from negative 1.9 crores to positive, almost break.
Yes.
So that is so is it fair to assume that the subsidiary has got turned around, or are there any?
Yes, and my apologies for not mentioning this in the press note. But you're very right. Your observation is right. The subsidiary from the first quarter of this year started turning around, and now we are confident that for the full year we'll maintain profitability and hopefully going forward as well.
Oh, that's very nice. That's excellent.
I can give you the number on that, sir. Last year H1, the subsidiary had a minus 11.73 crores, and the current year it is plus 2.92 crores.
Okay. Yeah, that's an excellent turnaround, sir. Congratulations for that.
Thank you.
So that's it for now. Thanks a lot, sir.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Amit Hiranandani from Smiths Limited. Please go ahead.
Sir, can you just help us with the current gross debt level?
Ramesh?
Sure. Yeah, sure. As on March 24, we had a debt of about 708 crores, which comprises of a long-term debt of 62 crores, working capital facility of about 401 crores, and a public deposit of 244 crores. This has moved down by 10 crores on September 24. The long-term loan has gone up to 109 crores, whereas the working capital loan has come down to 337 and public deposits at 351.
Okay, so broadly 700 crores is approximately gross debt level. And what is the cash and investment presently?
Sorry? What is
Cash and investments?
Yeah. You are talking about the balance sheet in terms of the cash.
Yeah, I'm just calculating the net debt level presently.
Yeah. The investment as on September 24 is about 21.37 crores, and the cash and cash equivalent is about 10.8.
Understood. And sir, looking at the expansion plans of capex of 225 crores and the working capital requirements, so can we assume the debt would remain at the same level for the next 12 months at least?
Yes, sir. That is our range.
Ramesh, it may, not by March 24, but it may reduce going forward because the profitability of the company is also improving. So as a result of that, it's likely to come down unless we can find new opportunities for investment.
Understood. And sir, for the capex guidance in Q4 call, you have guided for 200 crore capex, but now it has increased to 225 crores. Can you please let us know the breakup of the where we are going to spend, and also if you can also suggest the FY26 capex as well.
FY26 board ko bhi pata nahi hai. It's difficult for me to tell you, but roughly speaking, I'm leaving aside all this maintenance capex and all that, but there's about 40 odd crores, I think, in this machining of large windmill castings, and maybe about 30 odd crores on balancing equipment for cast aluminum. On agriculture tractor, again, maybe something like 40-50 crores. And hydraulic cylinders, maybe about 15 crores. Ramesh, have I left out? And this is roughly, these are the buckets, right?
The preparation, material preparation capex could be.
There's also about, so this is the other thing, this year we are looking at capex also from a viewpoint of improving our margins. So one of the projects that we're looking at is whether we can reduce our material preparation cost. So earlier it's basically make or buy. So some make or buy decisions are being taken where earlier we were buying, where we may make it if we feel that there's a financial gain.
So, sir, commenting on this last line of material preparation cost, so are we taking any steps to, take our EBITDA margin to any internal targets of 9% or something? Any midterm goal?
लोग तो दे रहे हैं ना.
Internally, आपका कुछ midterm targets हो?
नहीं जरूर. See, पिछले दो तीन हफ्ते में you've seen, kind of stabilizing of the EBITDA margins and stuff like that. Next year also, but next year, see, I don't even know how the domestic economy is going to be, and even global economy I know to some extent. But as we get closer, we'll have a better idea. But assuming it is not doom and gloom and has some positivity in it, yes, the margin should improve.
All right. Thank you, sir, and all the very best.
Thank you.
Thank you. The next question is from the line of Raja Kumar Vaidyanathan, an individual investor. Please go ahead.
Yeah, sir, thanks for the follow-up. Sir, I'm just looking at your segmental reporting. So I see that the automotive component segment, the profit has come down compared to the June quarter, and similarly the industrial component has given a significant increase in bottom line. So is there anything to read into this?
No. I'd actually answered, one of your colleagues had asked a very similar question. Now, automotive coming down is largely due to the fact that CV has come down. CV had a very good first quarter, but CV in the second quarter came down quite a bit. So that explains the automotive profit part of it. On the industrial, there are two reasons. One is last year in the second quarter, we had a one-off charge of about 9.84 crores towards pre-delivery inspection. And the second is we've ramped up the machining of large castings, which is profitable. So a combination of these has created that kind of negative to decent profitability.
Okay, got it, sir. And lastly, is there any guidance on the interest line item? Will it be flatlined, or because you said that there will be some reduction?
You're in Mumbai, Mr. Rajkumar?
No, I'm in Bangalore.
Okay. So I guess the Mumbai guys will have a better feel for that because they're closer to the governor.
One point we can add is we were enjoying a 7% on the packing credit, which the impact is roughly about 1.5 crores a quarter, and it was withdrawn from 1st of July. So, given that
this interest subvention now is only permitted for MSMEs. Earlier, all companies used to benefit. So for us, that going away, that the additional cost of that is about 6 crores. That's one of the impacts that we've had this year.
Okay.
But that said, one of our long-term goals is to look at improving our credit rating to the point that it actually has a bearing on the interest cost that is charged to us. But it may not happen immediately like this year, but it may take 2 years. But we are working towards that.
Okay. Excellent, sir. Thank you.
Thank you.
As there is no further questions, I would now like to hand the conference over to management for closing comment.
So thank you very much for all your queries. We continue to make improvements, although the market has its challenges, and we really gain a lot from our interactions with you. So look forward to our next interaction with you. And before I sign off, I should wish all of you a happy Diwali. Thank you.
Thank you.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.